All right. Hello, everybody. Hello. Welcome back to another open morning live stream. Thank you all for being here. Richard, what's up? What's up? Drew, thank you for being here. Let me share my screen and let me adjust the camera. Oh, no, the camera's gone. Hold on. There it is. All right, it's back in. Okay, so we've got some pretty interesting stuff. Let me just share this on Twitter real quick. Well, what's going on today? We have Walmart earnings, very important. Walmart at here. We have, after Walmart earnings, we have Michael Burry that has sold everything, and we also have Tesla that is mooning. Let me just tweet this out live real quick, then we're going to start. Live now, United States stock market is going to open. My tweets are so dumb. All right. Good morning, everybody. So let me open up Webull. First of all, I hope everyone's having a great day. Today is Tuesday, August 16th. We are literally close to September, which is quite phenomenal. Doesn't it feel like summer was yesterday? Like my June and July, I remember very vividly because I remember exactly what I did. But the fact that we're gone from June and July, that's quite amazing. The fact that it's over. Tesla was not at $927. Someone said, good morning, sunshine. Good morning. I missed those good morning, sunshine texts. Being single. Okay, anyway. So Tesla was not at 927 back in June, July. It has been rallying pretty well, up at 935 pre-market, doing phenomenally well. Walmart, we're going to get into their earnings in a little bit. They beat expectations, but their expectations were so low anyway that it didn't really matter that they beat. I mean, like, of course they were going to beat them. So up about 5% pre-market. Walmart is one of those stocks that you hold for 5 years and hope you get like a 10, maybe 15% return. I mean, it's doing well. Now, obviously, it had its fall from 160 to 130 on bad earnings last time, but not horrible. I think Home Depot is out today. I might be wrong on this. Down a little bit in the pre-market. Let's go to Palantir. How's Palantir doing? By the way, I have Palantir's down about 0.5% pre-market. I have a interview coming out with Sean from Invest to Live. I highly recommend you guys watching his perspective on if he sold or is adding to his Palantir position. I think for those who have not sold, you will at least get a little bit of confirmation bias is all I'm going to say. And it's going to be one of those videos you want to watch, basically. Good morning, Gabe. Thank you for being here. Tesla is mooning. Should have bought in the 600s. That is true. Should have bought a lot of stocks in the 600 or in June because everything is mooning apparently. Close to Tesla split. Yeah, I think that's the other reason Tesla's mooning. When this split news comes out, it's going to be very good for the stock. I mean, average retail investors are obviously going to want to buy. That just happens when there's a split. So, that's definitely going to be good. Target is up pre-market. I don't think they had earnings, but obviously if Walmart's doing well, Target's probably doing well. ARK Innovation 5219 post-market. I've been looking at ARKs in trades. Nothing too crazy. They're not buying the dip on anything crazy. They're not selling anything kind of crazy. So ARK is just kind of being ARK right now. DNA, I know, is one of their major holdings. This thing is at 4.2 pre-market. Oh, wow. It's up 20% pre-market. Oh, my. DNA up 20% pre-market. Not bad. So for shout out, Glitch Life, are you in here? Glitch Life's not here, but I know their position on DNA is pretty massive. So Kathy Wood has over 100 billion shares at this point of this. Is Tesla really doing a split? Yeah, they're really doing a split. It's not a rumor. Tesla's actually doing a split. BBY, yes, I'm happy you brought that up. Let's talk about Bed Bath & Beyond. So this is another thing me and Sean talked about yesterday. Here we go. They are, oh, wow, they're down pre-market, but they're up 23%. So Bed Bath & Beyond is one of those retailers that is struggling massively right now. It was shorted pretty significantly. Is one of those stocks that was shorted so heavily that you could tell there could be a possible gamma squeeze on that stock. And as a result of that, a lot of people loaded up on calls because they were resulting in some type of retail meme rally. And Bed Bath & Beyond, that probably should not be trading at this type of valuation, just given, the nature of their business. Is there really going to be a store to buy towels anymore? Like, you kind of think of that stuff. They're doing pretty well. So if you recognize that Bed Bath & Beyond was in a gamma squeeze position and you bought calls on it, obviously you would have been able to do well. Sam, thanks for being here. Appreciate you. Sham Sanker on the board of DNA. Chris, are you thinking of, would you ever buy any DNA? Is DNA a buy, guys? At this price, again, not financial advice or anything, but at this price, DNA so I did an interview on DNA a while ago, and the understanding I got is that they're a platform for biotech companies to build their drugs on top of, and Ginkgo Bioworks gets a royalty of the drugs. So it's not a traditional biotech play, which is interesting to me. And I saw it at 2.9. Well, yeah, it was at $2 May 31st up until June. Even in July, it was pretty much at 260, 270. So it's almost up 80% since then. I was thinking of buying it back then, but I was also like, it's a penny stock. It's below $5. You know, it's like, it's a little scary sometimes to buy these stocks. And you see Kathy loading up every day, but you're like, oh, Kathy's been wrong a bunch of times. So at this price, I mean, I don't think there's necessarily that much downside. Obviously, the downside is $2. That's where it was at the bottom. But it depends on where the macro goes. If the macro is out of the bear market, then maybe, you know, this is something that's not bad. BBY is short 36 point. Yo, you people from Europe, bro, you don't use decimals. You use these commas, Sam. I'm like, I read that as like 36,000 at one. It's like, it's still 36.49. But you guys use commas. It's so interesting. It's not bad. It's just interesting. You guys don't use the decimal points. What other stocks than Palantir do you own? I do own a biotech called PPBT, Purple Biotech. I don't recommend anyone buying it. It's a super YOLO play for me. I believe there's a drug molecule called NT219 that they've been developing for the past decade. The CEO recently just stepped down, which is actually bullish news. There's a lot of hints that they're going to get acquired. Again, I don't talk about it much on the channel because it's super risky. I've been holding it for about a year now. So that's one of the other stocks that I have. Morning, Everclear. We are 2 minutes away from the United States stocks market being open. Bro, that's literally what I have to do. Otherwise, when I enter these numbers into my Google Sheets, it thinks it's a date. Yeah, the comma, bro. The comma is so... I never got used to it. But again, the United States also with the metric system and also the United States is just weird at the end of the day. S&P, where are we at on the S&P? 427. So barely down pre-market. Nothing too crazy. Yeah, this market's relatively flat in the morning. Where's the TQQ? It is 38. TQQ is up. It's up pretty well, actually. So, yeah, I mean, it's not a crazy market. We're going to get into Walmart earnings when the market opens. We're going to get into Tesla moving a little bit. Meet Kevin stopped his market open stream because I actually watched this video where he said why he's stopping. And the reason for it was he's so freaking busy. Like, well, his reason was like it takes him so long to prepare for the live streams that he doesn't get to make regular videos. So he's like, it just can't see the value of it. For me, I'm not as popular as me, Kevin. So I think it's a great way to build community, which is one of the beautiful elements of YouTube. And so morning open and closing live streams to me are a fun way to, you know, actually develop a community that cares about you. So that's why I like doing them. Also, it's something fun it's like the first productive thing of the day. All right, are you guys ready? The United States stock market, if you're not ready, close your ears, is open. Wake your ass up. The stock market in the United States of America is officially open. Here we go. Let's do Walmart. Up pretty well, up 5%. Nothing too crazy with Walmart. DNA, mooning, 19.4%. I want to see if this actually has momentum or this actually just goes back to normal. Now, DNA has about 1.78 billion shares outstanding. So it's similar to Palantir in that respect. That's another reason I was like, I don't know, is a penny stock or do I want to buy it like that? So that's one of those things to think about. Apple, oh, by the way, Apple has put on hiring freezes. They have cut off recruiters that they usually hire to be able to get them more employees. The obvious reason, because they don't want to hire that many people. So that lets you know at least one thing about where Apple's head is at when it comes to getting more employees in the macro. Tesla 933 doing very well. Just a great day for Tesla to be up and ultimately, you know, doing what it is doing. NASDAQ at 13K, not too bad, down $46. NASDAQ is at 14K or 13K. 1,000 away from 14K. Disney at 124. Twitter, again, this deal, I think people think it's going to get done. And I guess we're going to see. I hate that bell. Bro, everyone loves the bell. Fuck, the cringe is real. Wake your ass up. I came strictly for the cowbell. More cowbell. That's why we're here. That's why we're here. Okay, let's get into Uber at 32, Pinterest at 23, Bitcoin under 24. Nothing too crazy. Let's check Palantir real quick. 979, down 1%. All right, let's get into Walmart earnings. I want to open that up, and I want to see what's going on there. Walmart earnings. Walmart. Okay, so let's talk about Walmart. This is going to give us at least a decent outlook on the consumer and spending. Theo, thank you for being in the chat. Appreciate you. Walmart 6 with second half outlook after earnings beat expectations. Walmart topped analyst expectations for earnings and revenue in the fiscal second quarter. The retailer's profits are under pressure, but it is wooing more middle and higher income customers who have turned the discounter for low priced food. I want to see their numbers. Here we go. Okay. Earnings per share 177 versus 162. And then rev 152 versus 150 billion. Wow. They did 152 billion in the quarter. Goodness gracious. That means they're going to do about 500 billion for the year. That's like insane. Probably more. Yeah, more than that. Net income 515 billion. That's their profit, 188 per share compared with 4. Yeah, so the reason they're up right now is because they pretty much beat their really low expectations in a decent way. I mean, EPS beat it way better than revenue at the end of the day, but to put 2 billion up in revenue when you didn't expect that, that's not bad at all. So excess inventory. Let's read this. Walmart and Target issued warnings in recent months that they needed to discount some items to get them off the shelves and out of store back rooms. Apparel, for example, saw a sharp drop in the past 6 months. Walmart's inventory levels in the U.S. were up 25% compared with a year ago. They told CNBC that 40% of the $11 billion of higher inventory reflects the increased cost of goods from inflation. That makes sense. People weren't buying at that time. Walmart is selling through that excess merchandise with markdowns and has canceled billions of dollars in order. Okay, so that's why investors are kind of bullish right now. So they're not ordering as many things from their suppliers as they were ordering, which means there's less things on their shelves, which means less losses they have to take for people not buying that stuff. And number two, they're marking down their stuff. So if they have a DVD player, no one buys DVD players anymore. I'm sorry. If they have a TV and the TV is 500 and they're marking it down to 475 and they're selling more of them, that's how they're getting through the inventory crisis. Membership also hit an all-time high. What they're also doing is they're giving a Paramount Plus membership with Walmart Plus. Let me know if anyone has Paramount Plus here. Because Walmart is launching a partnership so that you can have Walmart Plus and Paramount Plus. Snowflake is down 5%. Is Snowflake earnings out soon? Or did they do earnings already and I totally missed it? I know it wasn't last week or the week before. I have no clue when their earnings. I mean, let me look it up right now. Snowflake earnings. I feel like it's coming up. It's on. Yeah, no, they didn't do. Oh, August 24th. August 24th. Okay, August 24th. So we're gonna get it a little bit later next week. Cool. So we're gonna see. I want a Paramount Year Plus. Phenomenal comment, Andrew. Phenomenal. Earnings next week. Some analysts came out with a little bearish checks. Yeah, I think the one thing about Snowflake was that people say they're going to guide down growth, which is interesting. That's what I was talking about Sean with Palantir yet last night. He was just like, okay, Palantir reduced their guidance. He was like, name a company that hasn't. And I was like, yeah, that's true. And because he works in data analytics and sales, he was just like, Q4 is when most of their revenue is going to happen anyway. So it's like, at the end of the day, just because they're reducing their guidance, it doesn't mean it's necessarily a bad thing. It's just like part of the business, especially in a recession, which we are technically in. Nvidia 189. Nvidia did well. Their earnings were not as good. I mean, they had kind of like a Palantir earnings in terms of numbers being off and growth guidance not being as strong as it could be. Obviously, same thing with Palantir. But they're recovering decently well. Paramount Global up 0.66%, probably off that Walmart partnership. Chipotle. Does anyone own Chipotle? I saw this stock at $1,000 like 3 years ago, and I was like, why the hell would anyone pay $1,000 for Chipotle? And apparently, Chipotle was a sleeper. It was a sleeper. I have Paramount Plus. However, it only costs 98 cents for 18 months. Walmart isn't giving that much. Wow, that's really cheap. But the only thing on Paramount Plus is like old Nickelodeon shows and freaking like iCarly, right? Because I had their free trial a while ago, and SpongeBob, but outside of that, it's not that interesting. Snow got downgraded. Yeah, that makes sense. Anything else interesting? Nothing else is interesting. And the Spotify's at 120. Not bad for Spotty. Google 122. Google has officially gotten out of that 102, 103 range. It is stuck there now. T-Doc at 40. Kathy actually has been buying a lot more of T-Doc. If we do get into a huge rally, I mean, you could imagine ARK hitting. I sold out of ARK when at 88, so I took a loss on ARK a while ago. But imagine it gets back to 88. I mean, I think a lot would have to happen. Netflix is down pretty from 250 to 246, so down about 1%. Nothing too crazy. All right, let's go to CNBC. Let's see what the talking heads are talking about. See if there's anything new that they are discussing as well. But Walmart earnings is pretty good. I mean, like, the fact that Walmart is doing well is definitely, with inflation going down, that's like a good sign. That's not a bad sign at all. All right, it's too early for investors to get optimistic, or this one, 2030. Let's see this one. All right, let's share and let's see what they're saying.
What do you mean when you say that we're calling the Fed's bluff?
Well, equity markets are rallying based on this cooler inflationary pressures that we're seeing. Of course, last week, July CPI, PPI coming in lower than expectations, still hot. The ISM survey data that we watched suggesting that inflation is coming off the boil here. So equity markets are rallying based on the hope that the Fed is not going to over tighten here. Pretty interesting, though, that equity markets are loving the inflation data, but bonds really haven't flinched. We look at Fed funds futures markets still pricing in a 50-50 chance of 50 or 75 basis points in September, looking at 375 on the Fed funds rate by the end of the year. So bond markets are actually pricing in slightly tighter Fed policy. That may be based on more hawkish Fed speakers over the last few weeks, but equity is just going fully risk on here. We do think the Fed probably will cut in 2023, but given the recent economic data, they're going to be going full steam ahead for the rest of this year.
Yeah, we had Bill Dudley on, the former head of the Federal Reserve Bank of New York, and he said the equity market has gotten it wrong, even the bond market at this point. He said, look, the Fed is going to have to continue to be very stringent in what they're doing with this. They're not going to be able to take their foot off the gas on this. It may not be 75 basis point hikes every time, but don't get fooled into thinking that the Fed is going to be complacent on any of this. Do you think the bond market's right? Do you think the equity market's right?
We think the bond market is probably right here. You know, we have to remember that the Fed and all of us as investors are mostly looking at backward looking data. And frankly, Becky, friends don't let friends use lagging economic data and making investments.
So the argument she's making here is that a lot of the economic data we've been using has been these sort of like lagging indicators, and that's what's indicating the rally, which is incorrect, which is why they believe the bond markets are correct and that the rally that's going on right now is a bit ridiculous given the indicators that they've been using. That is already old news. It's already been priced in. This rally is a kind of delayed rally, and so they're not that bullish on it, essentially.
Investment decisions. You know, we prefer to use the leading economic indicators, which have been decelerating at a rapid clip, but probably have further to go until the data bottoms. So we want to wait until that bottoming process plays out over the next 12 months or so before we move further here into risk assets. You know, the cycle's moving fast. We want to play defense right now. So we're really embracing bonds. We want to move up the capital structure, get that income, be really patient here as the cycle plays out, and get ready to play offense in 2023.
Meaning you think this is a bit of a head fake and that we're going to retrace and go back towards our lows?
I'm looking at this market and the risk reward trade-off is not all that great. You know, a while ago, you guys mentioned this on the show, the S&P 500 was down 23% from its peak back in January. We're now down only 10%, and we're looking at a PE ratio that's now elevated again. We're trading at 18 times forward earnings on the S&P 500. So prices have gone up at the same time that earnings estimates have moved lower. So it's pretty notable right now to watch, you know, this rally in markets at the same time that earnings estimates are moving lower here. So we want to think about moving up in quality, getting more defensive here, looking at this late cycle period as one of decelerating growth, still aggressive Fed. I think it's too early here to get overly optimistic. And we're seeing investors add tons of risk to their portfolio right now. You talked about the rally in small caps, meme stocks seeing a bid, unprofitable growth companies again catching a bid. Not a great time to really load up on higher beta, more cyclical assets in our view.
All right, so they are bearish, but let me give you a counter perspective here from a Twitter account that I follow and that I actually enjoy pretty well. Let me show you guys what he just tweeted, some historical stuff. By the way, did anyone see that Michael Burry sold out of everything? Aurelia says, hit the like. Yes, please, guys, hit the like. I appreciate it. 166 people. Thank you for being here. Michael Burry sold out of everything. He is very bearish. We're going to talk about that in a second. Here's a really interesting tweet. Okay, let's look at this one. So Bloomberg says, and this is from a Twitter account called Gergevin. Bloomberg says this indicator has a 100% track record of calling the bottom. Okay, that's the first part. Whenever in a bear market, the S&P, so this is the indicator. There's a lot of indicators to determine this stuff, but this is one of the indicators that historically, as per Bloomberg, has been 100% correct. Whenever in a bear market, S&P 500 closes above the 50% fib retracement, that's Fibonacci, it has marked the end of every single bear market. Okay? So the frequency that a 50% retracement signal and the end of the bear markets, and on Friday, the S&P, which is the biggest, one of the leading, the index funds that most people care, it is the market, closed above the 50% fib retracement. If we look at this, what's 8/12/2022. So because in a bear market, the S&P closes above the 50% fib retracement, it has marked the end of the bear market. So for some reason, that metric of being above 50% has led to there being a end of the bear market, which means the new bull market starts, as you can see in this chart right here. And so on August 12th, 2022, which was the last Friday, that is when we ended above 50% on the 30-day, on the 60-day, and on the 90-day, 54%, 77%, 69%. That's the frequency of advance. So because we ended above 50%, that may be an end to the bear market. If that's the case, now granted, this has been correct every single time. So like you could argue that it's going to be correct again. But then you've got someone like Michael Burry who sells out at his entire position except one stock, which is a private prison stock, which is a bit not, it's a little unethical here. But still pretty interesting, right? Still very, very interesting. So I think that's what, that clip I just showed you says like you shouldn't be risk on. Then you have this other historical piece of data saying you should be risk on. There's just so many different elements of data here that you're trying to make an understanding for if this makes sense or not. Michael Burry is also a perma bear. That is also true. One thing to remember is Michael Burry is an incredible perma bear. He got one thing right in 2008. And since then, he's been seen as this guru, but he's been calling the crash for basically 14 years until it finally crashed in 2022. And that crash, S&P to 360, wasn't even a crash. Like it was, we were down, but we went back up so quickly. Not as quickly as the COVID rebound, but still, not too bad. Michael Burry was mainly short amid. Yeah. And that also makes sense. 185 people. Thank you guys for being here. Please check out the app in the description. It is my new startup. If you guys want audio content, especially daily Palantir audio content, please download that and sign up. Would mean the world to me. Let me know what you guys think about the product. I just launched that startup. We just raised some money for it. So please check that out and let me know what you guys think. Thank you guys so much for being here. Would mean the world to me. All right. Next thing we're going to go through is 2023 is going to be a rough road for markets. So we just got one indicator that it is incredibly bearish or bullish because the S&P went 50%. Now we're going to see the opposite perspective.
Because the market was in the dumps a couple of weeks ago. We're now in a 4-week winning streak, 50% retracement back off our lows from where we were. Still down in the year, not minimizing it. But how do you see things shaking out the rest of the year?
Yeah, the market is banking on the Fed's terminal rate being a lot lower than what it had previously anticipated, Brian, a couple months ago. There's also a fear of missing out, is my sense, in terms of retail investors plowing into the market again, expecting that the Fed put still exists. So if the markets crash, if we go into recession, the Fed is not going to hike as aggressively as everyone thought, but maybe even cut. And maybe they're just joking with regards to the quantitative tightening, which, by the way, Brian, of course, is set to go to 95 billion in the month of September. So I'm cautious. I think that the labor market is set to roll over. We see productivity losses combined with rising labor costs. That's a recipe for job cuts, not additional job gains. So I think 2023 is going to be a rough road, and I'm advising our clients to remain invested, but be hedged, protect your portfolios, even look at some structured products which can cap your downside in a volatile 2023.
Okay, I was going to ask you remain invested where, but you just said structured products. What exactly do you mean by that? Structured products?
Yeah, you can find products that will help you cap your downside, but it also limits your upside in terms of where you're situated, what your positioning is. These are items that in our firm we structure as per the needs of the client. So it's not one defined product. It's something that we look at for each specific client. But also, Brian, we're looking at defensive positions. So energy, and I heard you talk about industrials, utilities, staples. I prefer to take this opportunity to.
Joelle Loki, correct. She's just trying to sell her shit. Okay, so let's try to do some other stuff. I think this will be a much better one. Yeah, we gotta trust Becky, bro. Becky on CNBC is the actual one where you're gonna get some value. Let's go to Becky. So this one says June was a market bottom. Wharton's Jeremy Siegel, again, more bullish news for those who want the bullish news. Second half of 2022 is going to be strong.
Bill Dudley, the former Fed official, Bill Dudley from the New York Fed, he was on yesterday saying that he thinks the equity market has it wrong, that the Fed is going to have to do a lot more tightening. You're going to take the other side of that. It's a tricky thing to fight the Fed.
It is, but yeah, I'm going to take the other side of that. I think that we will have maybe 100 basis points left. I mean, perhaps 50, 25, 25. I think you look at forward-looking sensitive prices, they are not going up. The only thing that's going up is going to be wages in certain sectors. Take a look at the housing industry, which was a major inflationary force in the last 2 years. The NAHB index, which was reported just a few days ago, I just looked at it. It has had the biggest drop in 6 months in its history, only during the pandemic.
By the way, real quick, Palantir just shit the bed. 968. It's down through almost 3%. I just looked at my portfolio and I was like, well, the whole market shit the best, not just Palantir. Oh my. Hold on. Let me. All right, we'll get back to this video. All right, let's let this video finish, and then we're gonna get back to it because the whole market just trashed.
Pandemic year, month of March 2020 to April 2020, did we have a bigger drop? If you go on the ground with real estate brokers, they say prices are softening everywhere. And remember, housing is 40% of the core index. Now, will you see that in the official statistics? No, because of the way the government does the official statistics, they put it in very lagged. So you're going to see housing prices continue to rise there. But on the ground, they're not. On the ground, the sensitive commodities, the real prices are not rising. And I think if the Fed takes a look at that, they will not have to go more aggressively. So I think the market has it right here. I think with the June is going to be a bottom. And I think the second half of the year is going to be quite good.
So basically, you think it's time to declare mission accomplished?
I would say, well, I don't forgive the Fed for overdoing stimulus, providing the government with all the money that they wanted, which is way too much in 2020, 21. But if you take a look at the money supply, which is what I do, very often, they brought that to a screeching halt. I mean, we've had virtually no increase in money in 2022. And, my feeling is, I actually voiced if they continue this tight, they would produce a recession. If they begin to loosen a little bit, I mean, not loosen in terms of rates, because that's built in, but not keep that money supply, the biggest slowdown that we have ever seen, begin to raise it a little bit, I think we might get that soft landing that everyone else thought was impossible. Not a sure thing, but I'm becoming more optimistic about that.
What do you think the odds are, Jeremy, that the Fed is listening and would go along with what you're suggesting?
I hope they listen to everybody. And I really hope that they realize, again, their past mistakes of money too loose. And now they say, we don't want to make it just too tight. One has to realize, that the so-called natural rate of interest, people like Larry Summers who said, we have to go way above 2.5%. We have to go to 4, 5, 6. My studies have shown that really interest rates have fallen the last 20 years around the world, and we're already above neutral in terms of that. So if we go to 5%, we're going to absolutely have a very inverted curve and definitely guarantee a recession. So they have to be cognizant that they're 2.5%, which is their long-term Fed funds rate under a 2% inflation forward scenario, is really too high. It should really be about 1.5%.
We're about out of time, but very quickly, you think that we have bottomed, that the June low was the bottom for the market, unless the Fed puts us into a recession?
Yes, unless the Fed, keeps on saying, oh my goodness, we're getting CPIs that are just too high, continue to raise. Again, we need some raising there. I'm not saying stop now, but if they take a very aggressive 75, 50, 50 to, movement up to 4.5%, 5%, I think they're gonna be sorry that they've been.
So the guy's argument is that basically if the Fed gets to 4.5 to 5% on interest rates, we're going to induce a recession, even if the CPI is going down. Basically saying it's time for them to stop being as hawkish, which makes sense if you think inflation is going down and inventories are getting better and all that stuff. But that's sort of the core argument. So stocks are dropping right now. If you guys look at your portfolio, everything's pretty much down. Tesla is still doing phenomenal. Tesla is incredibly resilient at 930. Everything else has been shitting the bed. Excuse my French. It's down. Things are down. Microsoft is down. Some of these aren't down that much, but when I looked at my portfolio, so Palantir is definitely down. Let me pull up Palantir. Yeah, like 964. It was at 989 this morning. So that one took a beating, down 3%. Open Door is down. SoFi is down. ARK went from 52 to 50. S&P stayed relatively flat. Coinbase went from 91 to 86. That happened all at the point we were watching that video, kind of all at once. The market took a little bit of a dump. Doge is up big. Let's go to Doge. Oh yeah, wow, 15%. I think that Dogecoin millionaire guy, I think he still has all of his Doge. I don't think my guy sold. So if he does, I mean, if we do have the bull run again, bro, and Doge goes back to 70 cents and the guy makes all of his money back, that would be wild. That'd be pretty wild, right? That'd be pretty wild. DNA, look at this. It was at 420. It went just down to 374. Bed Bath & Beyond still holding tight at 16, still up 5% for the day. Twitter still at 44. I think this Twitter deal is going to get done, bro. I have a feeling. Or I don't want to say I have a feeling. It's just, it seems like the market's associating this deal with the getting done at some higher level than it was when it was $30. I know the market's not talking, the mainstream media is not talking about it that much anymore, but I think Twitter wants to sell to Elon, man. I think they want that 54.20. I think but the irony is if Twitter just waits it out and waits for the next bull run and they just fix some core features, like get rid of the freaking bots. Like when Elon Musk says Twitter could have 1 billion users, that's inspiring because number one, you just think about a guy who's like, his argument is like, why can't we have 1 billion users on the platform? You know, when he put out his like manifesto around Twitter, he was like, why can't we? It's like, why can't 1 billion people use the product? And then you're like, oh, well, everyone doesn't like to talk that much. Everyone doesn't like to be all intellectual. Twitter is more if you like have chatty thoughts and you put stuff out there. But his argument is like, why can't 1 billion people use this? And as a startup founder myself, it's incredibly, motivational to hear that. It's like, why can't 1 billion people use the thing you made? It's all a question of just getting it done. And so he has big aspirations for Twitter. Look at this, Bed Bath & Beyond up 7% now. It's squeezing a little bit. And you imagine that if he had full control of it and he actually was able to implement the changes he wants, he might be able to get it done. There's just a lot of questions in terms of the financing and the ability to actually put in a CEO and like getting the deal done, all that stuff. But we're going to see what happens with that. Bot is the core feature of Twitter. That's why they don't remove them. Yeah, that's true. Just bought 15 more shares of Palantir. Joel, I'm going to do the same thing with you right now. I'm going to buy 15 shares of Palantir. Actually, I'm probably going to buy 20. I've been meaning to buy some more Palantir. I'm going to do it on Robinhood right now. So let me do it live. 964. Let's do it. Let's buy buying shares. What's 25 shares? 240 bucks. All right, I'm buying 25 shares at 965. Let me do mainstream screen. You guys can see that. Buy Palantir 25, 964. That's 240 bucks. 963 now. And there we go. All right, 25 more shares. Buying the dip. I now have 2,228 shares. Good old Palantir. I've been meaning to buy some more. I've had some dry powder. I was like, let's buy some more. Let's buy some more shares. Not bad, not bad, not bad. All right, that's going to end up the live stream for today. 238 people being here. Thank you so much. I have a couple things before you guys leave. A couple things for today. Interview with Sean from Invest Live. If you are bag holding Palantir, please do not miss this interview. You're going to want to watch it. Primarily because he'll give you some confirmation bias on holding your Palantir, but his logic is very good. So that's going to be coming out. Number 2, I have a data analyst interview with a guy who likes Palantir a lot and has some concerns, but overall is very bullish. That's going to be out later today. And a couple of clips from me and Sean's interview. So definitely check that out. And final thing I'm going to say is, what was I going to say? Crap, what was I going to say? Hold on. Don't leave. It's not going to leave my mouth. Oh, no, it just left. Oh, yeah, late night stocks at 10 p.m. today. I'll be live again. So 10 p.m., make sure to, I should probably set it so you guys can set a notification. 10 p.m., I'll be here, and you guys will be able to see me. Oh, Gabe's mad at me because I didn't write puts. Gabe, I can write more puts. I just wanted to own some of the shares, my guy. I just wanted to get some of my shares. But yes, I will eventually write puts live so people can see it. Late night stock talks at 10 p.m. You guys will be able to see me. Last question, Amit, what's the difference between your app and Spotify? It's a very good question. If you actually go on the app, again, link in the description, the first audio called What is Audia? It's a 7-minute audio. It'll explain everything. And we'll talk about that more tonight on Late Night Stock Talks because I got to go. I got like 4 meetings back to back, 11, 15, 12, 1, and 3. By the way, I'm meeting with 2 investors today. One is an angel, one is a VC. So I'll let you guys know how that goes later tonight. But anyway, thank you guys so much for watching. We'll talk more about all that stuff tonight. I really appreciate 200 people being here. I will see you guys later tonight, 10 p.m. Have a great day, everybody. Bye-bye.